intro, Gabby. As Gabby said, good evening, gentlemen. I see it's only men here tonight. Len, thank you for inviting everyone. It's always amazing when our community members come together and actually start building towards this purpose that we have at Wealth Migrate. So that's amazing to see, and we are really privileged to have everyone here. Yes, so Gabby, would you take us further?
Sure, if we can go to the next slide. Perfect. So as I mentioned earlier, this is really an introduction for everyone into Wealth Migrate, what we offer, how we are able to offer what we offer, and then a brief overview of what we currently have on our marketplace today. Next slide, please, Alex. So firstly, I want to explain the Global Wealth Group. The Global Wealth Group is the holding company for a few of our brands that you may be familiar with, Wealth Migrate being our flagship brand, established in 2012, internationally recognized, award-winning, and our most recently launched brand, the Private Wealth Group. Overall, Global Wealth Group, the holding company, really aims to achieve or change inequality in the wealth gap by transforming how individuals can acquire capital. Wealth Migrate, like I said, is the flagship brand. It's open to investors who are interested in investing in international real estate, commercial real estate, and alternative investment opportunities as low as $5,000 US. Private Wealth Global is our newest marketplace, which is geared more towards individuals that are looking to invest at higher minimum investment amounts, beginning at $50,000 US. Although for the first quarter of this year, we have reduced that minimum to $25,000 for those who are interested in seeing what options we have on that marketplace, testing those waters with us.
Yes, that's always an interesting one, Gabby. I would just say from the investor's perspective, where I normally find myself, I as an account manager actually have to, deal with every single client. Obviously I have my colleague Alex Westhuizen, which you might or might not know. But we always see, or try at least, to see things from the investor point of view so that we can offer our investors really the best experience. Basically, to that end, this is always an interesting thing to discuss with my clients. Alex, if you would just go one slide back. I do know some of you, or I've seen, your name somewhere in the community. So I think you sort of know us from the Wealth Migrate side. Len, I know when we spoke, that was a thing for you to try and understand this sort of company structure that we have now. We started as Wealth Migrate, and most of everyone knows us as Wealth Migrate. Some people still find it confusing when we refer to the Global Wealth Group or to Private Wealth Global. It's just an amazing way that the company is growing and diversifying its offering to a wide array of investors in our community. So, this is always a very important thing, I would say.
Definitely, Fritz. It does speak to our growth as a business, and the biggest distinctions between Wealth Migrate and Private Wealth Global ultimately are the types of deals that we offer between both marketplaces and the investment amounts, the investment minimums. The reason for that is with Private Wealth Global, we are actually actively pursuing becoming licensed in the EU in order to be able to pursue larger deals with European and UK sponsors or British sponsors. These deals could be minimum raise or minimum capital raise targets upwards of 3 million per deal, which would require us to have a higher minimum investment per investor. The returns are also slightly different depending on the deal, and the fees for investors do differ on Private Wealth Global versus Wealth Migrate. But it is just another way that we are slowly expanding our global footprint and finding different ways to engage our global community and offer them a diverse portfolio of investments. Yeah.
If you think about you know, business class, first class, and you know, cattle class, basically you know, you've got different offerings for different brackets, different segments. And in this case, the reasoning, if you understand why certain deals will only be on Private Wealth Global, that has to do with international compliance. It's not us saying, look, we're not willing to take less than $5,000 per investment. It is the EU regulator. It's the, you know, it's global regulators that we have to, you know, basically accommodate and comply with. If we don't do that, then we're simply not going to be able to deliver the services that that you know, certain investors need from us.
Yes, exactly. Well said, Fritz. So with that being said, this evening we are going to be focusing on Wealth Migrate, our flagship brand, but of course happy to answer questions related to Private Wealth Global as you have them either this evening or offline later this week, either with myself, Fritz, or with Alex. Fritz, do you want to take this slide?
Yeah, so basically, you know, I think for many of you, this is a brand new experience with Wealth Migrate, as Len has introduced you to us. And you know, starting from zero, what we do, who we are. Yes, we started in real estate. Well, Scott started in real estate, IPS, you know, International Property Solutions. He was one of the founders, and basically just to explain the sort of growth path of the business, Scott, you know, achieved significant success with IPS, with him and his partner. Actually, I can't remember his name. But in any case, Scott being, you know, helping thousands of South Africans invest offshore. So he's built an extensive network in terms of what people need, you know, and what the wealthy are doing in terms of the way that you are structured internationally, what that actually means. And essentially that all grew into what Wealth Migrate became. Wealth Migrate being, you know, the purpose of Wealth Migrate was to democratize, you know, assets, to democratize institutional grade investments, which basically find themselves in the primary market, which we actually function in. We function in the primary market. This is not secondary traded assets. We're a marketplace whereby you can get access to these investments that you would otherwise have to spend more than $2 million per deployment, plus a heckload of you know, admin, lawyers, taxes that need to be filed for every single SPV you have. It's crazy, and then you have to be compliant, etc., etc. It's really a massive you know, discomfort. And I've never heard of one of my clients ever being happy with having their own structures. Any case, so we've replaced all of that. We've made it easy. We've created a marketplace. If you've got your own deals that you want to transact with, if they meet certain requirements, you can use our technology. If you want to invest into good investments by really institutional level institutions, then you can use our technology. Yes, thank you. So of course I spoke about Scott Picken. Gabby, you know, she's the head of global revenue. There's me, Fritz, your wealth consultant, and Alex, you'll also be working with him. And we are the revenue team. So we will be the people that you will be dealing with at the end of the day and consulting with and things like that on incoming deals, you know, practicalities of the platform, really. Thank you, Alex. All right, so basically what I said was, you know, you can see in this slide, we've already covered quite a bit of it. But we're talking about, you know, a marketplace where you can really just see what you're investing into. It's the growth of, you know, the self-directed investor, which is actually a major trend out there. I know we've been in talks with major companies, you know, well-known companies in South Africa in the investment banking space, you know, where they're really concerned about this demographic that they're not actually able to service, because they want to be self-directed, they want to invest, they want to be involved, they just don't want to give the power away to a financial advisor or portfolio manager. And that's really a growth in trend, and people are looking towards platforms to ease the process. I mean, I've done the same thing with my secondary market trading. I'm on easy equities, for instance, and you know, it's a dream. It's exactly what you want to do. It's that control that you have, that sort of that all-encompassing system whereby you can, you know, deploy your investments and really see the reports, get your tax stuff, you know, all of that type of stuff. It's all in one place. And at this, you know, you're looking at real estate opportunities. You're looking at it, you know, things like structured notes, which we'll get to a bit later. We'll get into detail on that. But it's really an opportunity to diversify in a very easy way. You know, it's almost like if you find a sponsor that you like, you know, we're going to go through the sponsors as well, but you actually you get to know them. You know, you understand with you know, with McFarlane, you get to know Matt Johnson in the webinars. You can actually engage with them. You can ask them questions, and these are the people who actually put the deals together. And it's not just you know, it's not just random people or Jill and Joseph trying to start a business. These are really credible you know, sponsors, really credible institutions that bring these opportunities to the marketplace. We are very strict about who we allow onto the marketplace in terms of the minimum criteria that they need to subscribe to. They go through a rigorous process through our scoping, our due diligence, our licensing partners signing off, our wallet providers signing off under EU regulations, you know, banks actually backing the deals up through financing. You know, if we're talking about real estate deals, for instance. So there's rigorous filtration that happens, and then we sit with high quality deals at the end of the day that you can transparently understand. You can see what it's about, and you know, you can basically decide to engage or not on your own merit, or you know.
Oh shoot. Definitely, and that's part of what we're highlighting here, is that it's challenging as an individual independent investor to go out and engage in the primary market, to find and invest in real estate deals, especially in commercial markets. If you don't have that 2 million in capital, that 6 million in capital, but still wanting to be able to access that type of institutional quality deal, it's really not something that is common or feasible for you as an independent investor. What we have been able to do, and Alex, if you can go to the next slide, please, is help our investors overcome those barriers, essentially by creating this elegant solution, this global marketplace that we have that allows you to invest investments, as I said, as low as $5,000, but upwards as much as you feel comfortable providing capital, without having to, on your own, set up any international bank accounts, international structures, work through the legal components of it, the tax structures. We handle all of those complex structures and arrangements, financial arrangements for you. We try to make this as simple as possible for the individual investor, and something that we try to make accessible for as minimal a fee as possible as well. And we're able to do this essentially by aggregating individual investor investments into a larger special purpose vehicle, or SPV, and then using that SPV to invest directly into a commercial deal. And we'll talk through that in detail in just a few slides, but just something to highlight here based on what Fritz has said. The Wealth Migrate platform really does allow you as the individual investor to start having more of a hand in the primary market and actually enjoying those benefits of investing directly in the primary market, creating that true global wealth for yourself, and being able to learn and become more of an expert in this space. Just so we can talk a bit more about Wealth Migrate as a company, for those that are not as familiar, here are some of our highlights as a business. We have members from over 152 countries. Members in the Wealth Migrate ecosystem are not just investors, but individuals that actually actively engage in our newsletters, in our marketing and content material, who are signed up onto our platform and engaging on our marketplace. Of those, we have over 62, we have investors from over 62 countries. We have much more than 62 investors, but investors investing from over 62 countries. Our investors are extremely happy with what we have been able to put on our marketplace. More than 3/4 of them do end up repeating their investments or reinvesting in additional deals that we put onto our marketplace. To date, we have been able to raise over $100 million for our investors, against 600 million capital raised total. 8 million earned by our investors against 600 million capital raised total. We do this through a pretty stacked team of more than 20 individuals located all across the globe. That includes client relations, compliance, product, supply, revenue and demand, and a very extensive tech team. And if you can just go to the next slide, Alex, and we'll talk through the actual specifics of how this whole thing works. Great. So it starts by Wealth Migrate actually sourcing these commercial investment opportunities. We have a supply team that actually reaches out, or oftentimes is contacted by potential sponsors. These sponsors can be financial advisors, they can be family offices, or they could be property managers or property developers themselves that come to us with different opportunities to invest in. And that can be, historically, it's been mostly commercial real estate in the US and in the UK and in Europe. We are starting to venture into alternative investments like structured notes, debt products, things of that nature. These sponsors are heavily vetted by us. They go through an extensive due diligence process by our supply team, and are also vetted by a third-party financial advisor who is actually located in South Africa and has a South African financial license. So it's a very strenuous process, I will say. And something that we take quite seriously. We do heavy due diligence on our sponsors. In addition to that, we also do heavy due diligence on the opportunities that we actually bring into our marketplace. So Alex, if you can go to the next slide. Oh, wait, nope. Alex, up. One more. Thank you. So Once we have an opportunity that has been vetted, has completed all due diligence, we will feature it on our marketplace. So if you are an investor, you can sign up to our marketplace, create your portfolio. We will ask you to go through a verification process, which is essentially the KYC, know your client or know your customer process that does incorporate some anti-money laundering compliance regulations that we need to follow for a number of our international regulators. But once you are a client on our marketplace, you can browse the current deals that we have. All information relating to a deal is featured in the actual deal page on our marketplace. We also host webinars, live webinars with the sponsor themselves at the time of deal launch. So if you have any specific questions related to a deal, we would encourage you to either RSVP to attend that webinar and ask those questions directly to the sponsor, or to watch the recording of that webinar after the fact. Oftentimes, the individuals in those webinars are myself and the CEOs or managing directors of the actual sponsors themselves. And we'll talk through who some of our sponsors are, who some of our partners are in just a moment, so you can understand kind of the heavyweights that we have bringing these deals into our marketplace. Another important thing to note is that everything is done through our marketplace digitally. So the subscription documents are signed digitally. Full investment process generally is done digitally online and can truly take less than a minute. I believe our tech team has timed it just over 60 seconds, or sorry, just under 60 seconds. Alex, next slide, please. Great. Oh, no. I just want to talk about how we aggregate our funds. So when a deal is live on our marketplace, that is usually when we are actively raising funds for that deal. Most of our deals have a capital raise target, which is essentially the minimum set by the sponsor for any institution that is looking to invest in that deal. This minimum raise can be anywhere from 100,000 US dollars to 3 million US dollars. It really is dependent upon the sponsor and the terms of the deal, as well as how much time we actually have to raise that capital for the deal. Once we have raised that capital or we have reached that deadline to raise capital, we will close the deal on our marketplace. This means that at that point, we then create a dedicated legal entity or that special purpose vehicle, that SPV. For those unaware, an SPV is a legal company or a structure that's set up just for this specific deal. And all investors from our marketplace are shareholders or become shareholders into that deal. You are a shareholder based on the amount that you actually invest. So if the minimum raise was 100,000 US dollars and you invested 50,000 US dollars, you would become a 50% shareholder in that SPV. We do provide additional information on this process, both on our website and in the deal in the deal folder itself as a part of the documents that you sign to learn more about the deals. Once the deal is fully funded, then we will create that SPV, move investor funds into that SPV, and invest through that SPV. It is essentially, as Fritz has just put it here, equity crowdfunding. And it is what allows us to be able to offer these commercial deals to the independent investor like yourself. And now we can go to that final deal life cycle and exit slide. So once a deal has been closed, we've created the SPV, we've sent those funds to the sponsor, then the deal is active and the sponsor runs the asset for the full term of the deal. They implement against the business plan that they've presented during the offering. The sponsor will provide quarterly reports on the performance of the property or the performance of the asset. And where it's relevant, depending on the terms of the deal, the sponsor will also make quarterly distributions. These distributions are paid into the SPV. And then from there, these distributions are paid to the investor's transactional account on our platform. We do have an online digital wallet, which is where those funds are filtered into. And as an investor, you have access to that digital wallet and can withdraw your funds into directly into your bank account.
Gabby, I think what's
believe that
important
covers.
there, I
Go
think
for
what's
it.
important there to notice was that separation between the sponsor declaring effectively dividends or distributions, and then the actual entity, the SPV, where everyone's equity is aggregated, then also declares a distribution. So there's a separation there. So sometimes we will see in sponsors offering documents, that you download on the platform. Those offerings oftentimes come just like that directly from the sponsors. So you can, sometimes you will see that there are things that are not necessarily relevant to you as an investor through the Wealth Migrate platform. For instance, the timing of the distributions in this case, which I know sometimes is confusing for some when they haven't had this sort of discussion before.
It's an excellent point, Fritz. Anytime you are dealing with international money movement, you're going to have a lot of eyes on you. Certainly a lot of regulators asking questions and digging a little deeper. To be clear, we are completely compliant across all international regulations, but because it is an international money movement, that process can take time from the time that the distributions are sent from the sponsor to the time that they're actually received by the investor. And it is really dependent actually on the bank of the individual investor. We find that some investors, depending on their country or the country where they excuse me, bank, there tends to be a bit more of a delay than other regions. Now, to speak more about our sponsors and how we select them, Fritz, do you want to cover this or do you want me to?
Yeah, well, basically, as you can see there, this is our sponsor designations. We have our emerging, developed, established, and tenured categories for these sponsors, and they will be displayed as such, on the platform. So not at this point yet, but that's the plan. So basically, what you will see is that there are minimum criteria for emerging being the lowest sort of category in terms of management experience. As you can see, companies operating age and assets under management. So we have very strict criteria that we measure our sponsors against. And this is all evaluated by our licensing partners for Alpha Cube Capital, which basically where we have our license for our Category 1 license in South Africa. And so we basically have sponsors that come to us, and we have our deals team that also sometimes goes out and sources investments that we know our investors have an appetite for. So that's why it's great when when you speak to your wealth consultant and you tell them, look, I want to invest in Europe now. I wanted to diversify away from South Africa. I want to look at something in Asia. I want to look at something in Europe. Then we really take that seriously. We do discuss this, and we bring it into our planning for deal pipeline and things like that. Very valuable. But that's the kind of process that we go through. A sponsor is effectively the supplier that lists the deal on the platform. It could be a real estate developer. It could be operator that comes in, sees an opportunity, and basically requires capital to implement. There's really a lot of thought that goes into who, at the end of the day, gets to be part of this. But you will see there, it's very, very easy to understand what the categories mean, and that informs you as a prospective investor to think, what is my perceived risk here, and then take that leap and either invest or not.
Definitely, and I think it's understanding that 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 multi-dimensional scope of risk. It's not just a risk in the deal itself, but it's also risk in potentially the sponsor. And
Yeah.
looking at our sponsor categories, we do take it quite seriously in terms of the minimums that we expect from our sponsors, and the types of deals that we expect from them, and what we will put onto the marketplace from these different designations of sponsors. And then I think that segues really nicely into our deals specifically. Fritz, I don't know if you want to speak to our deal selection lightly, and our risk categories that we have for our deals.
Yeah, well, basically this illustration that you see here is a graph that you will see on any deal card within the marketplace, historical deals and current deals. It's always a standard format that's on each and every deal. And this is how we categorize the risk in terms of, basically what we decided was conventional real estate. Because we started with real estate, we decided on conventional real estate risk categories. So if you look at core being low return, low risk, that will be a stabilized asset, for instance, which has no value add, strategy that needs to be implemented. It's a well managed, well tenanted, well capitalized, property in a well-to-do neighborhood that really just generates passive income. Low risk, so you're looking at around 7 to 8% IRR. In my experience, just spitballing it here, but that's what you're going to be looking at core. Core plus is obviously a bit higher on the scale in terms of return and risk. So that's basically the gradient that it goes up into. Value add, core plus is still a semi-stable, but more outskirts of a town, less occupancy, things like that. Value add, you are actually implementing. The sponsor comes and they say, look, I've got this a tranche of equity that you can invest into. We're raising capital. We're going to add value to this building. This building has been, these are the reasons why it's a good investment, and what the strategy is. You'll see that on the webinar. So there's a value add strategy to be, working capital might be added to the building, better marketing, management company brought in. So, examples like that. Opportunistic would be a new development, for instance, something which has basically a lot of assumptions, more sort of experience that needs to come into that, and also a larger appetite for risk, of course. So that is why we have these categorizations as they are here.
Great. So we've talked a lot about risk and compliance and risk management. I think this is really just to sum up kind of everything that we do at a from a management perspective within the business, so that you as the investor don't have to worry about meeting all of these requirements. So we do extensive investor due diligence. All of our investors that are investing on our platform are required to complete KYC, or know your customer, and AML checks, or anti-money laundering checks, before investing. Investing is actually blocked in the system for anyone who has not completed that and been verified by our third-party financial transaction partner, Lemonway, who is actually certified by European regulators. This protocol is applied both for individuals and for company structures. So if you are looking to invest in a professional, or as a professional entity, or as a trust, you will also have to go through KYB, know your business, and AML checks in order to become verified and invest via that channel on our marketplace. We also complete, as mentioned, sponsor due diligence and deal level compliance. This includes company legal verification, director and key actor background checks, past performance checks against the sponsor and the business. We have an investment committee and an internal due diligence process that is quite extensive and can be lengthy, dependent upon the terms of the deal and the terms of the structure of the sponsor. From the deal level compliance perspective, we ensure that our offerings are regulated in the country of the asset, and each country has a unique regulatory framework. So we always are striving to ensure that we are compliant across all of those borders. We make sure that we are structured and compliant across money movement and holding clients' money. So ensuring that we are not putting you at any risk or your money at any risk based on the types of structures that we put together. Our transactional wallet or our digital wallet is a core feature in our offering to investors and is a key driver in our business model. And it is what allows your money to be, it is where your money is held and is highly regulated and allows us to aggregate that money, put it into an SPV, and then provide it to the sponsor. Lemonway, or sorry, not Lemonway, compliance. In terms of financial advice in all jurisdictions, providing investors with financial advice is a regulated activity. So we do not provide financial advice and we do not recommend specific deals to any investors from a financial advisory perspective. What we are here for is simply to provide you with as much information as you might need to make the best decision for yourself, but in no way are advising you directly to make that decision. We want to make sure that you are just fully informed and have all of the information and resources at your disposal to make that decision for yourself. Similarly, marketing and investor acquisition, depending on the jurisdiction that you are in, is quite fraught and can have its own data protection clauses and compliance. And we strive to make sure that we are compliant across all international regulators and protective of our investor data and potential investor data. So that was a lot. If you have any questions on our compliance and risk management separate from this, if I haven't put you to sleep yet, please feel free to reach out to myself or Fritz and we can give you an even more extensive rundown. But I think now we should get into the nitty gritty of how to actually invest.
I just want to say, Gabby, I see Yaku has his hand up. Yaku, do you have a question? And Len has a question. I think we're going to need it in the Q&A at the bottom. Oh, I see.
Len, if you want to speak, you can unmute yourself.
Hi, Len.
Hi, Fritz. No, sorry, I was just clicking on the hand there.
Oh, yes.
Yeah, I don't have a question.
Quickly, Len, do you think we should walk everyone through the sign up quickly? Would we like to see that, or should we leave that for our conversations after this?
I think that would make sense because my experience with any property in South Africa has been it's a month or more process, whereas here, yeah, as you say, it's really minutes. So maybe
yeah. Let's do that. Let me do that. So I'm going to share my screen. And then I'm just going to take you to the platform here. Can everyone see my screen?
Yes.
Great. So it's as simple as clicking on sign in. You just decide on a simple choose a simple email, choose a random password. We're creating one live here, people. Oh, what's going on here?
Oh, I see what it is. Sign up, Fritz.
I see what it is. Sign up. Sorry about that.
Good thing we're doing this in real time.
Yeah.
The pitfalls, what to avoid. Yeah.
So we can click here to receive whatever kind of communication you want. I personally recommend, you know, finding out about the investment opportunities at least, because we try our best to keep you up to date. But you know, obviously we've got a lot of investors, so it's a very handy way to keep up to date on what we do. T's and C's, you can of course go read them there. And then you sign up. The next step is basically what we call a self-attestation process. So you decide on which country you're in. So in this case, we'll just choose South Africa. Now, there are different investor categories that you can decide. You know, you're going to read through these categories. One of these four, an everyday investor or a certified sophisticated investor, a self-certified sophisticated investor, and a high net worth investor. I know that's a mouthful, but just go choose one, you know, that seems to fit your bill as close as possible. I always say it's basically you seeing which one fits you best, and it's not that serious in terms of having to comply to every single thing that it says, you know. Anyway. So of course, you're going to have to verify your email address at the beginning in order to start the process to actually verify your profile. That's step one. So if you haven't got it, basically you can click on resend and it'll share it again. This is basically the marketplace. So I just want to show you the first things that are relevant here from someone who just signed up is you'll see here on the right top hand side that what we call our KYC shield is this red one here. It is red because you're not verified yet. So you can go through the marketplace. You can see what the opportunities are. You can, you know, read through the investment summaries and market summaries. You can play around with a calculator, all of this stuff. We'll get to that now. So you can do that without getting verified, but you can't invest yet. So once you go through and you click on your KYC shield, you can go through the process of basically giving us the information we need in order to get you verified by Lemonway, which is the wallet provider. And so it's basic information that is general KYC across platforms. If you've used Easy Equities or any other platform, then you've most likely gone through this process. Banking details, uploading documents. It's all very self-explanatory. If you find this process arduous, at any point in time, let us know. We do want to improve this constantly to make it as easy as possible for investors to go through this process. But we believe it's quite handy at this point. So you upload your files here, and once you're done, you click on Save and Submit, and within 24 to 48 hours, a general KYC could be done, sometimes even faster than that. If you want to register a trust, for instance, or a company in order to invest in through, you can do that here. But that process is of course a bit more of an arduous process compared to the KYC, which is Know Your Client, and that might take a bit longer. But we do have a very helpful client support department, and they really do hold your hand through the process and help make it as easy as possible. So that's basically the process. Once you're verified, you're 100% able to fund your wallet. If you look at the banner here on the side, you'll see that there's your portfolio tab, where you can see all of your investments. Of course, there's nothing here now, but if you've invested in any of the deals, you will basically see every single deal here, what you've invested, what the timelines were, all of that kind of information in your wallet. It's almost like a bank statement type, list of transactions that affect your wallet balance, of course, at Lemonway. It's as easy as clicking on deposit funds. Of course, it's not working here because it's unverified, but you click on deposit funds, you'll immediately get a unique reference number that is unique to your specific Lemonway wallet. You use that reference and the information that follows in order to do your international transfer from whichever entity you're investing in. Once the money lands, it reflects in your wallet, and that's that. In terms of withdrawing funds, if you'd like to do that, it's as simple as going through that process. When you click withdraw funds, it's 3 steps. It takes a few seconds, and within a few days, you would have your funds back, depending, as Gabby said earlier, on the banks involved, the jurisdictions involved, things like that. That's your wallet. So once your wallet is funded, of course, you can invest in deals. Any of the deals that are marked as portfolio, you will invest using the wallet. So you will fund your wallet first. Your money, as I showed you now, you go through the deposit process. You will see the balance in your wallet, and then you can go to a portfolio deal, such as McFarlane in this case, and you can click on invest in this deal and go through the investment process. You will basically see what kind of fees we are charging you. It's full transparency on also the effect. You can see what the difference would be if we even took the fees away. So this is really about the transparency, and that really brings us into the deal level page, where exactly that, trust, transparency, and alignment, which is our 3 core values at Wealth Migrate. This is where the transparency comes in as well, is this page. So, in terms of, as Gabby said earlier, this is your resource to come and do your own sort of, due diligence on this deal, do your own research on the deal in order to decide if it's something that appeals to you. You can download the documentation that's relevant in terms of the fact sheets and all of that kind of materials, sponsor information, all of this here. And of course, when you hit a wall and you feel like you need to talk to someone, then you just call me up or call Alex up, and we can help you. And if we can't directly help you, then we'll get someone that can help you. So yeah, that's basically how it works.
Awesome, thank you, Fritz. Alex, if you can just open up and reshare our PowerPoint presentation so we can jump into fees, which Fritz showed briefly in our investment calculator, but I do want to break it down for everyone. Perfect. Just one more slide, Alex, please. Thank you. So fees, in summary, we charge a 3% initiation fee for every deal that you invest in, plus a 10% profit share on returns, or any gains earned on your investment over time. Our initiation fee is broken up into platform services, so that includes the cost of sourcing and completing due diligence on a deal, member services, KYC, AML verification, investor onboarding, in-house operations, and maintaining your digital wallet. Another 1% is allocated to our structure services. So when you invest in a deal offshore, we essentially will do that heavy lifting for you through the use of creating global structures. And our structure service fee covers the cost of setting up and maintaining that dedicated international SPV for every deal that we offer. That includes the cost of lawyers, accountants, advisors, compliance officers, everyone who's required to create and administer that structure. If a deal sponsor is already providing a structure through which you can invest directly, then we will not charge you this fee. We truly want to be as transparent as possible. So you may see on some of our deals in that investment calculator that there might not be a structure services fee there, in which case your initiation fee would be 2%. And then finally, that final third is for investor acquisition and marketing. And really just as a global marketplace, we operate across many different countries with different rules and regulations on how we can market to current and potential investors. And so in order to be able to accept investors from these countries, we're often required to work through regional based partners that are licensed by their government regulators. And that component of our fee is usually around 1% of the investment amount. If a deal that you have invested in does not successfully close on our marketplace, then you will not be charged this fee and you will receive your originally pledged investment amount back in full. So again, we're very transparent about the fees that we charge, and we only charge if a deal is successful and successfully closes. Additionally, for profit share, we have a 10% profit share fee on returns generated by the investments on our platform. This can include dividends, interest, any capital gains. Unlike most REITs or funds, though, we do not charge you an assets under management fee, and we do not charge any returns fee if you are not actually receiving those returns. So essentially, we are only making money if you are making money. And that is essentially how we ensure that our interests remain aligned with those of the investor. And also a huge part in why we are so diligent in the vetting of our sponsors and the deals that we put onto our marketplace, because we want to ensure that we're providing you with quality deals that are going to be successful and show successful returns. Alex, if you can go to the next slide, I'd like to touch on 3 of our most recent sponsors, and then Fritz will close us out with a discussion on our most recent deals on our marketplace. I would love to highlight 3 current sponsors. So Feldman Equities, we recently completed a deal with them for an office space in, I believe it was in Tampa, Florida, in the United States. Feldman is a very well-established organization. They have decades of experience and hundreds of years of collective management experience across all of their leadership team. They specialize in commercial office assets, and many of the deals that we offer with them will likely be in that asset class, in that space. Another recent partner is the McFarland Group. They are a fully integrated real estate firm that is focused exclusively on the senior living industry, so niche, but experts in this space. The McFarland Group is located in Dallas, Texas, but they have a regional office, in Phoenix. They have a collective over 50 years of experience in management in senior living, and have been quite successful in many of the deals that they've been able to offer or invest in within the senior living space, which is interesting given the current senior living as an asset at this point in time. And Fritz will discuss that a bit more when we talk about our current deal with McFarland. And then Alex, if you can just go to the next slide. And this is a very new partner. We actually are in the process of completing due diligence on our first deal with this partner. RE Capital is privately owned pan-European property investment, asset and development management business. They are based out of London, Lisbon, and Geneva. They were originally a part of the Geneva Management Group, and have just recently stepped away and formed their own, or reformed and restructured to become RE Capital. But they offer residential and residential and office and mixed use investment opportunities in Europe. Specifically, our deal that we are currently completing due diligence on with them will be in Portugal and will be a residential investment opportunity for apartment space in Marvia, Portugal. So very excited about this offering that we'll have with RE Capital coming up soon. And then Fritz, take it away if you can explain to or just highlight the deals that we currently have on our marketplace and the deals that we've recently closed.
Great. I'm looking forward to RE Capital. It's actually, Gabby says it's so new. It's actually so new that I don't even know about it. I know of it, but I don't know the deal yet. So I'm excited to actually hear what it is. So I'm sharing a link in the chat box for the launch webinar that we did with McFarlane a few weeks ago. I don't know if that link is working. We'll just make sure to share it by the end. So basically with McFarlane, they've been around since 2008. Actually, the managing partner and a few of the other investment committee members have been in this niche of real estate in the US since 2002. As far as I know, it's around 52 years of experience in this specific asset class in the US, within predefined areas in the US, specifically Texas, where they thrive, where the center of the business is. When they expand outside of Texan borders, though, they do partner with good managing companies. Any case, basically, that is the background on the business. They've done hundreds of millions of dollars worth of deals. They've generally capitalized from what they call friends and family, which is sort of a direct network of capital, surplus sort of capital providers. Thanks, Len, for confirming that. So, basically they've been performing very well since inception in 2008, when McFarlane was started by Matt Johnson, the managing partner. And they've been consistently returning, an average IRR of 28% to their funders since inception, which is extremely well. And that's because they really are experts in their field. If you watch that webinar, you will really see what the strategy is. Effectively, what it is they're raising a fund, a closed-ended fund of $100 million, of which, when we started this raise, there was already 54 million taken up, basically by this certain amount by McFarlane themselves. I believe it's $5 million that they put in, Gabby, or is it? I think it's 5 million. Yeah, that McFarlane put in themselves, which is very important. Characteristic of sponsors that we always want is to put their own skin in the game as well, because then we know that they're fully in the trenches with our investors. So that's very meaningful. But in any case, we are raising a total of 100 million. And what this fund is all about is basically to deploy into assets of between $2 to $20 million per asset, aged care specific assets. They've chosen for various reasons. They see an opportunity in the US market that for which they are raising these funds. They specifically targeting distressed assets which are to come onto the market, have already started to come into the market, but increasingly so within the next 24 to 48 months, which is the planned deployment period for the $100 million. I believe some of it has already been deployed, Gabby, if I'm not mistaken, since we started this. But yeah, so basically the fund is already operational. And they plan to basically, as they've done many times before, they basically source a deal. They're involved from sourcing the deal, where they actually either target a distressed asset, or it could be just an asset that represents an opportunity in the general market. And then they would then basically implement some kind of value add strategy, very well explained in the webinar, but basically whereby they add working capital, better marketing. They've actually got a very successful part of the business, which is sort of subdivided, which is the management company that has been performing very well, being very profitable as a business unit by itself. They utilize that, and they basically turn the asset around, stabilize it, and then they do that with a few assets, and they aggregate these assets instead of selling them separately to REITs, exiting to REITs, which is more often than not the institutions that take these assets up. They actually aggregate them. They put them together as a portfolio. They can generate a 15% premium on actually aggregating them as opposed to selling them separately. So they really straight through from building a deal, seeing the opportunity, funding it, implementing the strategy, and exit. They've got a full plan in place, and this fund is not it's exactly the same thing. They've got a full strategy. Very, very good partner. Very good deal, in my opinion. What is relevant to McFarlane, though, is it's a capital generating deal. So as you will see, the cash on cash is lower, which is the passive income component of the deal, which pays out on a quarterly basis as distributions, and the remaining part of the IRR is treated as a capital appreciation. Because this is a fund that's going to be operated over 6 years, it is a long-term deal, but very good returns, so there is that to take into consideration.
Thanks, Fritz. And very well explained and summarized. I think just one final piece to call out here is that this is considered an opportunistic deal, because senior living as an asset at this point in time is considered a distressed asset. And that is for a number of reasons, actually even before COVID and the pandemic began last year. Senior living within the United States, and specifically within the Sun Belt of the United States, there were several developers that saturated the market with senior living, assisted living, independent care, and memory care homes. Since that point in time, though, with COVID, this is an asset and a niche that has typically struggled. What I love about this McFarlane piece is they looked at the demographic data and made a very calculated decision. The oldest baby boomer just turned 75 years old on the 1st of January of this year. And that is a very large group or demographic that will be entering into senior living care within the next 5 to 7 years. And strategically, that is what this fund is looking to target, is those distressed senior housing properties within the United States, looking to acquire them, and then quickly close on those assets to realize the value at purchase. They're going to focus on non-performing loan acquisition at steep discounts to create wider margins of investor safety, and really add value through capital improvements, through occupancy improvements, through change operators if it's required, and then exit within 4 to 5 years, just at the time where this demographic of baby boomers will be aging into and further, I should say, flowing money into this particular asset. So it is a very interesting strategic move, and I think an interesting asset to get in terms of truly adding a very diverse or different type of investment into your portfolio. And senior living is one of those assets that is kind of a mesh between medical and residential in a lot of ways. So yeah, it will be extremely interesting to see how this fund performs over the next few years, but it's definitely an interesting opportunity, and one that we're proud to offer to our community.
Very excited about this one, Gabby. One thing I do want to point out is basically the also the fact, I'm sure a lot of you have heard about the migration that is happening in the US as well, in terms of you know, the north-south migration that's taking place. And you know, this was directly, as Matt Johnson put it, basically as people are placed by their children more often than not into these kinds of places. And you know, now with COVID, they're having dual pressures because they've got costs going through the roof. You know, PPE costs, they have to have all of this extra stuff there, all of these extra protocols, less people in the facilities, the lowest occupancy rates since they started recording this data in 2006, I think he mentioned. But in any case, it's around there. And so you've got lower revenues, you've got higher costs, and you've got over leveraged assets in the south. So that's a bomb waiting to explode, and this fund is there to take advantage of that. And at the same time, there are nice demographic trends, as you're saying, that's playing into the appeal that this will have, especially for REITs, you know, within the exit period for this fund.
Yes, and the growth of this asset towards the exit period of this fund, definitely. So this is an opportunity that is open for investment right now on our marketplace. If you sign up this evening and are verified by the end of this week, then this is something that you can take advantage of and invest in directly. We do want to share, and this might be a bit of a pat on the back for us, but we're just very excited about this recent opportunity that has been fully funded, but to show you the different the alternative asset or alternative investment opportunities that are available to our investors on our marketplace. Alex, if you can go to the next and final slide, please. So recently we hosted a structured note on our marketplace. This was a bit of a foray away from real estate and into a debt product, specifically a structured debt product. This product was with US tech companies debt, and was funded within 2 weeks. We raised over $430,000 within 2 weeks from our investment community into this fund. And Fritz, I'll let you explain all of the other fun parts of this deal. And for those that need to pop off, please feel free to reach out. We will have a similar structured note on our marketplace within the coming weeks for you to take advantage of.
Yeah, so basically, you know, this, as you can see on that card there, you're looking at an IRR of 16.2%, and you're looking at a cash on cash of the same. So it's a full income instrument, which is one of its objectives, is a stable, predictable income with heavy downside protection. So that's basically what it comes down to. It's a contract. The fancy word is structured notes, but effectively it's a contract or an agreement between IDAD in this case, which is you know, the company that's been around since I believe it's the 80s or something, Gabby, but you know, they've been in business for a long time, and they you know, they negotiate with investment grade banks. In this case, it's BBVA, a Spanish bank, not that well known in South African circles, but still a large institution nonetheless. Oh, 2000, I see, 2002, Gabby. All right, so not that old, but basically, you know, that's an agreement between IDAD and the bank, where certain stipulations are made. The bank will guarantee the return as long as the value of a basket of underlying assets, in this case it's equities, you know, in this case it's Amazon, AMD, Apple, and Tesla equity, so share values. So that is treated as the underlying basket, and whatever this basket does is, if it stays within a certain band. In this case, it's the upper 50% of the value of, well, the initial value of that basket, then your capital is 100% protected. Your income is 100%, guaranteed by the bank. So that's the essence of the instrument. Of course, we can talk about it for 2 more hours, but I think we've already gone over time a bit.
But definitely a unique and new opportunity for investors. And as mentioned, we will be offering similar structured notes on our platform in future with IDAD and Cashbox Global. Very exciting product for our community. And certainly you can see those returns alone are quite thrilling for an individual investor to be able to take advantage of historically something that was exclusive to institutional investors only. Great. And I think at that point we'll close. Alex, if you can just go to the final slide. I'm not sure if anyone is keen for Q&A, but I'm happy to have Fritz and I and Alex stay on for the next 5-10 minutes and answer any questions that anyone has, either in the chat box or the Q&A. But thank you for your time and attention and presence, and we will be sure to mail this presentation deck to everyone, as well as our contact information so that you can get in touch with us on anything that has been discussed this evening.
Thank you so much, Lynn, for introducing everyone to us tonight, and thank you for everyone's time. Gabby, thank you for your time. Does anyone have questions? Okay.
Fritz, we did such a good job. There's no questions to be had.
Yeah, no questions.
Well, please feel free to reach out to myself, Fritz, Alex, or Len if you do have any follow-on questions from this evening. Else, thank you again for your time, and hopefully we'll see you soon.
Thank you, everyone. Good evening. Bye.